Oh, hello again, everyone. And again, thank you so much for joining us here today. My name is John Banghart. I am Senior Director of Cybersecurity Services at Venable. I'm part of a team of cybersecurity experts here at the firm, non-lawyers, who work very closely with some of the great lawyers here at Venable, including my co-presenters today, Ken and John, who you'll be hearing from a little bit later. My background has been many years in government and industry, working at places like the White House and NIST, places like Microsoft, really focusing on these complex cybersecurity issues that plague us today. And at Venable, continue to do the same thing, working with our clients in addressing so many of the threats that we're faced with that we're going to talk about here today. And then hear about how does insurance help and how does it not. So this has been a very hot topic. It's a topic that so many of our clients are asking us about on a regular basis. It can be confusing. It can be frustrating. So we hope today that we're going to give you some of that information that you need to be successful. So next slide, please. And you can just build that out. So look, you can't look at the news, read the news, scroll past the news, wherever you get it from, every day, right? You are hearing about cyber attacks of various kinds, various shapes and sizes. The examples here, right, cover a wide gamut. Everything from, the Colonial Pipeline to T-Mobile, financial institutions. And those are all just within the last couple of years. And the reality is there is a lot that you don't see, right? Even from our perspective here at Venable, we are helping clients on a routine basis with ransomware attacks, other kinds of attacks, both big and small, that never make it into the news, right? Your organization may have suffered an attack, maybe more than one. So it is a constant threat that is out there that we are constantly hearing about and seeing. And I think one of the things that's so important to recognize is that everyone is a target, right? I've got some data later that I'll show you that sort of paints that picture a little bit more clearly. But there was a time many years ago, certainly when I got started in this, that most hackers, they were going after government agencies, they were going after banks. If you're my age, you've probably seen some of those old movies like War Games and others, where hacking was this big grandiose thing. Certainly now we know that it is commonplace, that every organization from very small mom and pop shops, if you will, to massive international organizations, to agencies in every government are not just at risk, but are getting attacked and have been successfully attacked. And it's also important to remember that even if you're not a direct target, you can still get caught up in these attacks. Some of you may remember a few years ago, 2016, I think it was, there was a global ransomware attack. It was called WannaCry or Petya, not Petya. You may recall hearing about some of that. It impacted thousands of organizations globally, most of whom were not even the original target, right? This was a spray attack of a sort where somebody, the bad guys here, released it into the wild, and it was self-propagating. Right? It was a ransomware variant. It was a virus that could spread once it got into an organization. So it spread very quickly, and it spread inadvertently to organizations that were never meant to be the original target. That attack cost billions and billions of dollars, not only in lost revenue, right? One example was the Maersk Shipping Company, one of the largest shipping and transportation companies in the world. They've said that it cost them upwards of $350 million when they got attacked. Their ships were still working, but the systems that guided the ships could no longer function. And so ships were sitting, product wasn't moving. So the point is that regardless of what business you're in, whether you think you have anything valuable to hackers or not, you are at risk. There is no way for you to avoid being at risk. You could be a target, or you might just get caught up in something else. And it happens very, very frequently. Next slide, please, John. Thank you. You can just build out a few pieces here. So while the slide's building out, right, let's talk a little bit about some of the different kinds of attacks. We talked about the fact, hopefully I made the point, if you didn't know it already, which I assume you did, you're at risk. Let's talk a little bit about what some of those risks might look like. Obviously, ransomware, cyber extortion, these are big topics, and I'm going to come back to those in the next slide and talk to them in a little bit more detail. But I want you to remember that just because ransomware is sort of the big attack, the big topic of the day, That does not mean that the other attacks have stopped. It doesn't mean that we can let our guard down with other types of risks that we may have. So one is social engineering. So one of the things that I see very commonly in my practice, in addition to ransomware, unfortunately, are these frauds, right? Where somebody pretends to be the CEO, they pretend to be a business partner, they craft a convincing email or they make a very convincing phone call, and they get somebody to wire money somewhere, right? Or they get people to provide access to something. Those threats are still going on, right? I mean, the reality is I'm currently working 2 ransomware cases, and I just had one of these fraud cases come in this morning. No ransomware, just run-of-the-mill fraud, if you'll pardon the term, right? So these things continue regardless of whether or not we're hearing about them in the news. Because you have to remember, the people behind this, the criminals behind this, they're looking for any way that they can to make money. And they're going to go after those targets that they think they can get some money out of. Social engineering continues to be a huge one, right? And part of the reason why is that social engineering, such as phishing emails, or increasingly phone calls, also texts. People are getting texts that are phishing texts, if you will. What the criminals are doing often is they're using that as the mechanism to gain access to your network to do something else, right? Maybe it's to get onto your network and sit there for an extended period of time, like an advanced persistent threat. They may want to do that because they want to monitor your business deals. They may want to gather up personal information for future extortion efforts. There could be any number of reasons. Or they might use a phishing email to get the credentials that they need to log into a system and actually launch a ransomware attack on your system. 9 times out of 10, criminals are getting in through very common mechanisms, and they're able to release the ransomware and put your organization in that difficult position. And that can be even if you've got anti-malware in place. Phishing attacks are getting more sophisticated, right? Most organizations have some sort of phishing protection, and that's great. You absolutely have to have that. In fact, right before this, we were sharing phishing stories amongst ourselves leading up to the webinar. Happens all the time, right? We get them. They do get more sophisticated, right? And so you have to always be on your guard, whether it's through training, through technology, whatever the case may be. Those attacks are still happening. And again, remember that it often can be the way that ransomware gets into your network, or the bad guys get into your network to do other things, right? So viruses, distributed denial of service, you don't hear about those as much anymore. The term virus and malware sort of gets thrown around interchangeably. Distributed denial of service, actually the technology's gotten pretty good about combating that, but a lot of organizations still aren't protected. And if you're the kind of organization that depends a lot on machine transactions happening all the time, you're sharing a lot of data with partners in an automated fashion, a distributed denial of service attack can actually be very damaging, right? In some cases, as damaging as a ransomware attack, because it's taking you offline. It's preventing you from being able to do business. If you're an online retailer, right? And I've seen everybody from Amazon to small online, again, mom and pop shops that have a small website get hit by these attacks. They can hurt your business. They can really hurt your bottom line. I have seen cases where people have gone, and there's actually DDoS as a service that you can actually go out and buy. If you've got a credit card, you can go out and hire a bunch of hackers to do DDoS as a service, to use against a competitor, to use against somebody you don't like. I've seen it happen. Is it illegal? Of course it's illegal, but people do it. So you have to continue to be on the guard for all of these things and other things that are happening out there. Next slide, please. Yeah, a few more things to build out there. Thank you. So let's take a closer look at ransomware. I know I've mentioned it a number of times, but again, it really is a hot topic right now, and it's worth spending just a little bit of extra time on to give you some insight. First thing I'll draw your attention to, hopefully you're able to see it on your screen in the lower right, is these common industries targeted by ransomware. And this was current as of to the end of second quarter, hasn't changed a whole lot. Your business is in one of these sectors, right? Regardless of what you're doing, it's in one of these sectors. Some are targeted more than others. Why might that be? Well, again, remember, these are criminal organizations, but they are financially motivated, right? They are organized crime in often the truest sense of the word. What that means is that they are always looking for things they can monetize. They're looking for data that they could sell. They're looking for organizations that might be willing to pay the ransom. And so every sector falls into that to a greater or lesser degree. The cases I'm working right now, one's a large real estate company, the other one is a small international manufacturer. Two very different businesses, both got hit by the same ransomware, both are going through the same problems, having the same issues. So your business is in one of these sectors, you are likely to be targeted. In fact, I'm sure you will be targeted. And for whatever it's worth, as I mentioned earlier, you might be tempted to take some small comfort and say, well, look, I'm in food and staples retail. I have a 3.3% chance of getting attacked. But I think what you have to remember is that these attackers tend to shift, right? And if one attacker has a successful hit, say like on a Colonial Pipeline, for example, other bad guys are going to be looking for similar kinds of targets, right? So they're going to move to wherever they think they can be successful. And so you can't rely on, well, historically, or for these 2 quarters, it wasn't our sector, it wasn't our business, because it can shift very, very rapidly. And we have seen it shift, right, over the years. It used to be, as I mentioned, it was financial services, it was government. That was a big part of the target set, but it's expanded now, right? The pie has grown in the sense that there are a lot more sectors, really all sectors, that are being impacted. So let me draw your attention to a couple other pieces here. I mentioned all industry sectors are targets. Average ransom payment, 136,000. Now, what's interesting about that number, right? If you think about what you've heard in the news, if we went back to my first slide, there are companies paying 7, 8-figure ransoms, right? Are the ones that we hear about. So why is the average payment only 136,000? Well, it's because there are so many of those happening. In fact, by the middle of this year, this past summer, there were 117 ransomware gangs active globally, 117. They are hitting targets across the board. Sometimes it's individuals, sometimes it's small businesses. So what you end up with is, yes, you've got these very large payments on the other end, right? 7, 8-figure payments, and those are not uncommon. But you have a lot of these smaller payments that are occurring. Again, citing my 2 most recent examples, one payment was in that 7-figure range. The other one was about $100,000, right? 2 different businesses, 2 different models, 2 very different ransomware payments, all based on a whole bunch of different calculus from the business perspective, what was reasonable, what wasn't, and what's the negotiating strategy or the willingness to negotiate on the part of the ransomware gang in question. They are not all the same. They are not monolithic. How you manage one of them is going to be different than how you manage another. And there's 117 different ones at any given time, and that fluctuates. So that's why that ransomware payment can seem very low. If you are an organization that can get hit with ransomware and maybe losing millions of dollars a day as a result of that, paying a 7-figure ransom may be within the realm of reality, right? Because you're losing so much money anyway, and you start to go through these calculus. Could spend all day talking about how to manage ransomware, and that's something that we can help you with. So by all means, reach out. Happy to talk to you more about that. But let's look at some of these other numbers, right? So average downtime, this is a critical one. Oftentimes, people who've not been through a ransomware attack, they have this vision in their head that, okay, I got hit by ransom. I'm going to figure out whether I pay or not. I pay the ransom. Okay, I'm back to normal. Even decrypting your data can take days to weeks. So even if everybody is true to their word, you pay the ransom, you get the decryptor, that process could take weeks to work out. Even if you get the decryptor and you're working diligently to get things back up online, you could still be down for days and weeks, which is why the average downtime, 23 days. So think about what would happen to your business if a significant component or all of it were down for 23 days. You're doing everything right, you're trying to recover, it just takes time. It doesn't happen overnight. So you have to build that calculus in when you're thinking about what actions do I need to take, what sort of protections do I need to have in place. Which leads to my next point, which is what's the average remediation cost? So average ransom payment, $136,000. Average remediation cost, just over $2 million. Right? Now, again, averages can be tricky, but the point is that there are going to be costs associated with a recovery from a ransomware attack that are separate from the actual paying the ransom itself. And I note here at the end, just again, as I mentioned, this fluctuates a lot, but you know, there are different sectors that are more heavily targeted at any given time. I listed 3 here in particular. I will note, as sort of a final note on this slide, that going back to my point that every ransomware gang is different, there are some who have sworn off, for example, attacking hospitals. There's a gang right now called Black Matter that started actively or started being active this past July, and they sort of operate on a franchise model. Yes, they do. I told you these are businesses. And so part of the agreement, if you're going to be part of the Black Matter franchise, is that you're not going to go after hospitals, for example. And then they've got some other rules in there as well. Now, are those enforceable? Not really, but there are different ways of looking at this. Early on in the COVID pandemic, a lot of ransomware gangs said they wouldn't attack healthcare. That didn't last very long when they realized how much money they could make, when they saw how bad it was going to get. And there have been hospitals that have been hit. In fact, there was a case in Germany where a hospital got hit, and unfortunately, a woman on her way to the hospital in an ambulance got rerouted, and she passed away. So these things happen, and they start to have consequences. Next slide, please. So we've talked about some of these already, but let's just drive home a couple of final points on this piece of it. There's a lot of different elements to this, right? So there's in terms of cost and the liability to your organization. And of course, you can probably now start to see where this is going to pivot into a discussion around insurance. But payment to the ransom, payment of ransom to the attackers, to the bad guys. There's a cost associated with that. Government fines, right? So we've got this little bit of a problem right now where if the ransomware group or ransomware gang that you're dealing with is associated with a sanctioned country, it's called the OFAC list out of the Department of Treasury, you could actually be subject to fines, right? In sort of a punishing the victim sort of model. The good news is that the Treasury Department has been paying close attention to this issue, and in fact just recently updated their guidance on this to make it a little bit easier for organizations to kind of push back on those fines, right? To say, look, we did everything that we could do. We don't deserve to be fined here. So, but it could still happen. Class action lawsuits, right? This can happen depending on the nature of the attack, what you did to prevent it, what you did to recover, and how much it hurt your customers or partners. Government investigations can happen. And as I mentioned, right, we always have the remediation costs, the recovery costs, all of which factors into how much money am I going to need if I suffer a ransomware attack. Next slide, please. And so the final point I'll make here, you can just build that one out, that I'll make before handing it off to my colleague is, most traditional cyber insurance doesn't cover, or excuse me, most traditional insurance policies don't cover cyber types of attacks, right? They're usually covering one of these 3 things that you see, right, across commercial general liability insurance, but it's not really going to help you, from a cyber perspective, because it just doesn't fall into those categories, which is why we have a whole separate category of cyber insurance that we're going to talk a lot about here. There have been some exceptions. You see one cited here. My personal view is I don't know that I would rely on that. I think cyber insurance in one form or another is here to stay, which is why it's so important for organizations to be able to understand it, know what's in their policy, know what they should and shouldn't be expecting, and watch out for some of the trapdoors that you can run into. So with that, I'll cede the floor over to my colleague, John. So you get another John right away. And John, over to you.
Perfect. Thank you very much, John. And before we move on to the next slide, just to flesh out a bit the sort of interesting case from this past summer on the Landry's case in the Fifth Circuit, of the 3 categories that are covered under CGL policies, bodily injury, property damage, the first 2 generally are not going to be providing coverage for cyber risks. That third category, personal and advertising injury, is where the policyholder was able to find some at least defense cost coverage in this particular case. In Landry's, the personal advertising injury definition included, among other things, damages arising out of the oral or written publication of materials that violates a person's right of privacy. So Landry's manages hotels and restaurants, which obviously involves processing payments. And Landry's payment processor discovered that a data breach had resulted in the installation of a program at certain locations. that stole personal information of those individuals during payment processing. And the Fifth Circuit found that at the very least, the insurance carrier had a duty to defend from a suit arising from this occurrence, because the stealing of that data essentially was publication of that data. The court took a broad view and said that publication can be as simple as exposure to view to others. And so that's one instance where you may find some coverage under a traditional CGL policy. As I'll be hammering away on over in this section of the presentation, it really does come down to what the words in the policy say. That's always going to dictate whether you're going to find coverage. So with that being said, the next type of more traditional insurance policy is your first party property policy. And these policies generally cover direct physical loss or damage to your own covered property. But that sort of begs the question, right? What is covered property? And as I'll be, like I said, that it comes down to how the definition is worded in the policy. And we've got two cases here that sort of lay this out very nicely. A more recent case from the District of Maryland in 2020, National Ink and Stitch, where a ransomware attack resulted in data being lost and also in software being damaged to the point where it was no longer operating efficiently. In that policy, covered property was defined to include data on various types of storage media. And that was really important because the policy didn't require that the storage media itself be damaged, for example, the computer disk or the chip or something like that. But the policy defined the data itself as covered property. And so in this case, because the software and the data was not operating as efficiently as it was supposed to after the ransomware attack, the court found that there was direct physical loss of or damage to the covered property. The court did not need to look at and see whether the computer itself or the disk itself had been damaged. Now you contrast that to a 2001 case out in the Western District of Oklahoma, where the policy had a very different definition of covered property. It related to physical injury or loss of use of tangible property. And essentially, as you can imagine, if you have a case where your only damage is to the data and software and non-tangible items, you're going to have a hard time convincing the court that coverage has been triggered. And that, in fact, was the case here. So we sort of pulled the quote from the court: computer data cannot be touched, held, or sensed by the human mind. It has no physical substance, and it is not tangible property. So here you can see, again, based in part on slight variations of the policy wording, courts can come to a different outcome on the question of coverage. Directors and officers liability policies, we just wanted to touch on this briefly. Based on based on how your company's coverage is structured, D&O policies may just protect the company's managers from claims. Some companies choose to purchase what we call Side C coverage, which also insures the companies, but that's not everyone. These policies generally provide coverage to managers for claims of, for example, mismanagement, breach of duty, those types of claims. So you can imagine a fact pattern where these policies could provide coverage for a cyber-related claim. So, for example, you may be dealing with a shareholder derivative suit, or like John mentioned earlier, maybe a third-party class action suit because arising from a data breach where large amounts of people's data was exposed to the world or to hackers, and that the managers fail to adequately protect that sensitive data. That's something that you could find some coverage in a D&O policy for, similar to a government investigation arising from those types of facts. And here again, the specific wording is going to be crucial. Policies may contain an explicit exclusion related to cyber claims, although based on our experience, that does not appear to be market at the case. I think that's pretty unusual to have right now, but it could become market in the future. Or there might be some other exclusion that a carrier may rely on to deny coverage that is not as obvious at the outset. For example, there might be an exclusion for claims arising from privacy violations. That could be an issue. In addition, let's say there's a vendor that brings suit in part based on your company's alleged failure to comply with data protection measures that are in the contract between your company and the vendor. The carrier very well may rely on the very common contract exclusion there to avoid covering such claims. And so, what the ultimate outcome of the coverage dispute would be dependent on the specific facts. Those are exclusions that could potentially get in the way of a cyber-related claim here. And then finally, we have crime policies. And these policies generally provide a variety of coverages, including employee dishonesty, forgery, computer fraud, other incidences that may cause a loss to you or your company. And again, as we've been stating, it really is the policy wording that will determine whether there's coverage. And then we have two cases here that highlight the importance of knowing what your policy says, the importance of slight variations in language. So for example, in the Apache case, which was in the Fifth Circuit in 2016, the policy covered loss resulting directly from the use of any computer. And the scheme here started with a phone call from the fraudster who was pretending to be a vendor, stating that payments now needed to be made to a new account for that vendor. The employee correctly followed protocols and stated that the request needed to be submitted in writing on the vendor's letterhead. And the fraudster did this. He did it from a fake email account, and he also generated some fake letterhead. And the payments were thereafter made. But the court found no coverage here because the scheme was essentially multifaceted. It involved a call from the fraudster, it involved the fake letterhead, and it did also involve emails. But the court found that those fraudulent emails were merely incidental to the scheme, and that the loss did not result directly from the use of any computer. So this is an example where the court took quite a literal view of the policy terms and required that the loss result directly from that computer fraud, largely based on the policy language there. And then you can contrast that to another case from the Second Circuit in 2018, metadata. So here, the coverage grant, you can see, is not as strict. It merely states that the policy covers direct loss resulting from computer fraud or the alternative fund transfer fraud. So you can note that this differs from the coverage grant in Apache, which stated that the policy covered loss resulting directly. Here, it's just resulting from. And in this scheme, the fraudster sent emails posing as the company president, directing payments to a contractual counterparty. He did that from a fake email account. And he also made phone calls pretending to be that supposed contractual counterparty. And he also sent emails along the way as well. So the court here found that the fake emails were essentially the proximate cause of the loss, and that no other cause severed that causal chain. So the policyholder was able to win on summary judgment in that coverage dispute. So I think comparing these two cases is sort of a nice way to wrap up a discussion of these more traditional insurance policies and to hammer home really the two main points with regard to these sort of legacy type policies. The first is that there is potentially coverage under these policies, depending on what the facts of the claim are. In general, unless there's a good reason not to, we always recommend that you submit the claim to all your insurance carriers, even if the word cyber isn't in the title of the insurance policy. Because from our perspective, the worst that can happen is the carrier responds and says you're not covered. And then you can go from there and assess your likelihood of success. But at least you get the claim in and you don't have to worry about any timeliness issues down the road. And the second is that it really is the specific wording used in the policy that is going to determine if there is coverage. And it's important for all policyholders to work with their broker, to work with counsel, to make sure that they understand the specific words that are used in the policy and the impact that they have. And so now, in order to discuss specific cyber insurance policies, I will turn it over to Ken Cronstad.
Great, thank you, John. So as you mentioned, I'm Ken Cronstad. I am counsel in Venable's Los Angeles office. I help policyholders nationwide secure coverage, and I also counsel policyholders on policy reviews and renewals. And I'm going to talk about coverage under cyber liability policies, but as John just mentioned, as between traditional policies And cyber policies, it's not an either or proposition. There are pockets of coverage available even under those traditional legacy policies. And there are also coverage available to fill gaps via endorsement. So as an attorney who represents policyholders, I would much rather have a dispute over which of several insurers is going to respond first to a loss versus a dispute over whether one insurer is going to respond to a loss at all. So against that backdrop, let's start to discuss cyber liability policies. First off, there are no form policies. Coverage has the market has stabilized a little bit in the last few years. So coverage is now fairly similar across carriers, but the language varies from carrier to carrier. So while all the policies out there will generally get you to the same place, they might take a different path to get there. And we're going to talk a lot about this today, but the language of the policy is always critical. As you're going to see, one additional word or even a comma can make a huge difference in terms of coverage. Another point about these policies is they are typically named peril policies. So they're only going to cover the specifically enumerated events in the coverage parts. Another thing about these policies, they are typically claims made policies, which means the incident has to have occurred during the policy period and the incident has to have been reported by the insured during the policy period. Another thing about these policies that makes them a little different from more traditional policies, or at least most more traditional policies, is they cover both first and third party liabilities. So whereas a CGL policy is really only covering third party liability, property is really only covering first party, cyber liability policy covers both. And we'll talk a little bit more about that in a bit. And finally, another thing that makes these policies a little different is the carriers typically offer multiple coverages that can be purchased buffet style. What I mean by buffet style is it's not a one size fits all policy that's offered on a take it or leave it basis. Coverage is usually offered in an array of different coverages, and the policyholder or would-be policyholder can pick those specific coverages that they need. So for example, if your business doesn't have a large online presence, you may not need to purchase coverage for multimedia liability, or at least you may purchase less of it. Similarly, if you have a business that doesn't store personal identifying information or personal health information, you may not need to purchase breach response coverage or regulatory coverage, or you might not need as much coverage as another type of business. So with that in mind, let's look at some of the first party liabilities that are typically covered under a cyber liability policy. First and foremost, we've got network and business interruption. That's going to cover lost income and additional expenses incurred because of a network interruption due to a breach or some type of security event. They're also going to cover data, digital asset loss and restoration. That's the cost to replace or restore lost or damaged data. As discussed extensively so far already, these policies are also going to cover cyber extortion and ransomware. They are also most often going to cover reputational damage. However, that coverage is sometimes expressly excluded, more so in older cyber liability policies. I say older because the oldest policies may have only been around for 5-6 years. But this type of coverage is helpful for both large and small businesses. A 2017 study showed that almost 2/3 of all cyber attacks are aimed at small businesses. Policies also cover civil fines and penalties. They cover losses due to theft of trade secrets, intellectual property, or funds. Loss of funds is definitely less common, but it does happen. There was an incident a few years ago involving Bank of America, where a B of A worker who was hired to work on a project involving ATMs created malware and loaded it into dozens of ATMs that instructed the ATMs to dispense cash without actually creating a record of the transaction. So those are some of the more common first-party liabilities that are covered. Let's look at some of the third-party liabilities that are typically covered. Most importantly, cyber liability policies are going to cover security and privacy breaches. And under that umbrella, there are a number of different types of suits that might be implicated. So you've got litigation by the victims of a breach, whether it's customers or employees, all arising from some sort of data breach or a failure to secure confidential information. That might also under that umbrella, you'd find coverage for litigation by shareholders. That might also be covered under a D&O policy. And it's also going to cover regulatory investigations. Another third-party coverage is internet media liability. That's the cost to defend regarding alleged privacy violations. Another third-party coverage is liability associated with defamation, copyright infringement, or product disparagement. And finally, suits involving the vendor loss of third-party data or information. Now, we'll move on to the next slide. I want to pause for a minute and talk a little more specifically about ransomware. I know John B. talked about this pretty extensively as well. But we're definitely seeing some changes in the ransomware coverage just within the last couple of years. Insurers are really taking a hard look at the risks associated with ransomware coverage, and in many cases are limiting coverage. The reason for this is pretty simple. There's been as John mentioned, there's been a huge spike in the frequency and cost of these events in the last couple of years. You saw from John's slides earlier, ransomware payments have increased exponentially just since 2018, and they've more than doubled from 2019 to 2020 alone. So you can certainly see why there's been a shift on the insurer side regarding ransomware coverage. Now, I personally don't expect to see ransomware coverage go away completely, but we have seen, and I think we're going to continue to see, premium increases. In the last couple of years, we've seen increases of up to 50% or more on renewals. And I think I know we've seen, and I think we're going to continue to see reductions in overall coverage for ransomware. So for example, a company that maybe had a cyber policy that covered $15 million for ransomware, when they've come up for renewal recently, may have had that cut back to $10 million or even $5 million. And also the relevant premium cost has also increased over that time. So like I said, I don't expect ransomware coverage to get excluded anytime soon. But let's go to the next slide and talk about some of the more common exclusions you will find in these policies. The first two are pretty closely related. It's representations and warranties about data security and failure to follow stated security practices. A few years ago, these were in the less common category, but they have jumped all the way to the top of the list now. The reason is that it sort of makes sense from a practical standpoint, from the insurer's point of view. The cyber risks are constantly changing. Claims are increasing. The insurers can't predict who's going to be targeted. But the one thing they can assess is how well prepared an organization is in the event that it is targeted. Hence, insurer scrutiny of security protocols has gone up pretty dramatically. So whereas a few years ago, the focus was on salesmanship and getting people to buy more policies, it's completely flipped in the last couple of years. And now there's actually an increasing trend of non-renewal for businesses who the insurers deem their security practices are just not up to snuff. There have not been many court cases addressing cyber liability policies, but there was one such case, and it involved these types of issues, and it was Columbia Casualty v. Cottage Health that involved the release of private healthcare information. More specifically, Cottage Health left confidential health records unsecured on their servers, and that ended up getting indexed by Google. And as a result of that, the records were publicly available on the internet for a period of time. There was understandably, a class action filed against Cottage Health. They settled that for $4.1 million, which their insurer Columbia Casualty paid, but it was subject to reservation of rights that was pretty shortly thereafter followed by a declaratory relief lawsuit in which Columbia sought to enforce an exclusion for failure to follow minimum required practices to maintain data security. And they also alleged that Cottage Health had misrepresented in its insurance application its compliance with best practices. That suit was dismissed and sent to alternative dispute resolution. So we don't get the benefit of a court interpretation of those types of provisions. But the key takeaways from that case mirror what we're seeing. And that is that it is increasingly difficult to get a policy at all in today's market without having a cybersecurity plan in place. And even if you have a plan in place, it's going to be increasingly difficult to get coverage if you're not pretty regularly training employees on and following that cybersecurity plan. So moving on to the next slide, we've seen what these policies cover and what they exclude. Let's talk about some key steps you can take as a company when you're obtaining or renewing a cyber liability policy. The process actually starts even before you obtain or renew the policy. So before obtaining a policy, you want to ensure that your company has cybersecurity policies and practices already in place. As I mentioned, insurer scrutiny is on the rise. Last year, we actually saw a drop in the overall policy count due to increasing underwriter scrutiny. I don't think it's realistic to expect to be able to get policies or renew them without having a plan. I do expect enforcement of those failure to maintain exclusions to continue. The other point is that you want to focus on even before you try to obtain or renew a policy is to know your specific organization's risk profile and take steps to mitigate that risk. So you could have an incident where a hacker exploits a network vulnerability and steals patient information. They also load malware into the system and shut down the network. And as part of that, they cause end user devices to malfunction. And then to top it all off, they extort the organization to remove the malware. A company that faces that type of risk needs incredibly broad coverage that covers network security and privacy, regulatory actions, data restoration, ransomware, and even event breach costs. On the other hand, an organization that doesn't even store PII, or personal identifying information, or personal health information in the first place, doesn't need that same type of coverage. I think it's helpful to think of it as sort of a bell curve where you're comparing the likelihood of the risk for your particular organization against the potential loss from risk for your organization to try to come up with an acceptable range. For example, it may make sense to have 90 to 95% expected coverage for high risk, high loss exposures that your organization might face, but maybe a lower threshold is appropriate for lower risk exposures. And don't get me wrong, insurance is absolutely a valuable and necessary backstop in any breach response plan. But armed with that type of knowledge about your organization, the goal is to try to reduce the risk in the first place, both contractually and through IT security measures. So let's move on to the next slide. Once you've taken those steps, let's talk about some practical tips when obtaining or renewing a policy. First off, you want to take a holistic approach to your insurance portfolio. A standalone cyber liability policy is good. It may even be a necessity for a lot of organizations these days, but there are still pockets of coverage available in those more traditional legacy policies. And you can also supplement coverage in those policies by an endorsement rather than necessarily adding that piece of coverage to a cyber policy. So for example, if you have a company that needs internet and multimedia liability, you can absolutely get that type of coverage out in the insurance market in a cyber liability policy, but you may already have it in an E&O policy or even your CGL policy. Another example, John mentioned this as well. Cyber liability policies are not going to cover bodily injury and property damage, but your CGL and property policy might. Now, those policies, at least the standard policies issued, are almost always going to have an exclusion for data breaches, but there are generally also endorsements available to add that coverage back. Another thing to keep in mind when obtaining or renewing a policy, it is a seller's market right now. So cyber liability policies, that's relatively new coverage. A few years ago, it was absolutely a buyer's market, but that's flipped. And the reason why is that normally the insurance companies do their pricing and coverage. They determine pricing and coverage based on 25, 30 years of actuarial benchmarking. So based on that, the insurers were able to understand the risk and price the products appropriately. I think now in 2021, with the benefit of hindsight, it seems pretty clear that the insurers initially underestimated the potential exposures from cyber. And as more data and claims have come in, just in the last year, year and a half, some cyber insurers have suffered loss ratios of over 100%. And that is just not a sustainable business. So what's happening is we're seeing significant premium increases, premiums of 20 to 50%, in some cases even higher in some industries, like the energy industry. In some cases, premiums have nearly doubled in recent years. We're also seeing higher deductibles. And so that's what's happening in the market. The other thing you always want to keep in mind when you're obtaining or renewing a policy, and frankly, this applies to any policy, not just the cyber liability policy, is language matters. You always have to carefully scrutinize the language of your policy or any policy you're considering. And with that in mind, let's move on to the next slide and look at a couple specific policy forms. So this form comes from a crime fraud policy, but it could just as easily be an endorsement to an E&O policy, or maybe even or it could definitely be a coverage part to a cyber liability policy. And this one covers social engineering fraud. So the schemes John B talked about and John M also talked about in Apache and metadata. And you'll see that for those types of schemes, it requires that some sort of callback verification be performed. Now, I'll tell you, in metadata, there was no callback verification performed at all. So under this form, they're not getting coverage. In Apache, they did actually attempt a callback verification, but they called the number on the fake letterhead and not a previously known number. So if you look on this form, I don't know if you can see it because the print's kind of small, but under number 3, it requires that you use a predetermined telephone number. So even in Apache, they're not getting coverage under this form. And you see the highlighting, that second sentence, the callback verification has to be recorded, logged, or otherwise documented by the insured. So even in Apache and metadata, even if the employees have done the right thing and actually performed a verification by calling an old number, they still might not get coverage if they didn't appropriately document that. And that really drives home the importance of carefully scrutinizing the language and taking an integrated enterprise approach to your insurance portfolio. That portfolio shouldn't exist in a vacuum. The company needs, key personnel need to know about it. So if your policy says that you have to perform a verification and you have to log it, then you need procedures in place to actually implement those steps. And you need to train employees and make sure they know to do that. Because otherwise, if an organization gets hit with a breach, and even if it does the right things, it might not get coverage if, at least under this form, it didn't also log having that it actually did the right thing. And let's move to the next slide and look at another form. This is a pretty standard cyber insurance agreement for third-party liability for a security breach or a privacy event. They'll use different terms, but this is pretty typical language. And I am absolutely not going to put this other form up on screen, but I had a client a couple of years ago who asked us to review an existing policy prior to renewal. And you see that highlighted language, any failure to protect confidential information. They had a similar form, but it added one key word in there, and that was the word negligent. So it only covered a claim alleging any negligent failure to protect confidential information. So to get coverage, the client had to, a claim did not arise, thankfully, but if they had had to get coverage under that form, they would have had to argue that it was at least alleged that the company negligently failed to protect confidential information. Now, some of you may see the problem with that. Regulatory agencies, when they're considering, when a breach occurs and they're considering whether to impose fines or penalties, one of the main things, if not the main thing they look at, is the reasonableness of the company's security measures and actions. So a policy form that requires the policyholder, or that includes the word negligent, requires the policyholder to take coverage positions that might actually prejudice it on the regulatory front, because there just isn't much daylight between negligent and unreasonable. And don't get me wrong, if a policyholder finds them in that situation, there are ways to talk your way out of it. You can certainly make clear that you dispute any allegations of negligence, but the better practice is just to avoid a policy form like that in the first place. Let's move on to the next slide. So in the last couple of years, we've seen these, John B. mentioned the gangs of hackers out there. We've seen them even targeting insurance companies to gain access to information. But why would the hackers do this? I off the top of my head, I can think of two reasons. One is to peg their ransomware demands to the policy limits available under the policy. You can imagine it's really, when an organization is corresponding with a hacker, it's really hard to convince them that you can't afford to pay the $5 million they're demanding in ransomware when they tell you, I'm looking at your policy right now and you've got $10 million in coverage. The second reason that they would want to do this is if by doing that, they gain access to application information, then they also have background knowledge on the policyholder's security practices. And you see that second headline on the page about CNA Financial. Remember the Cottage Health case that we talked about earlier? It was one of the only cases to interpret cyber policies. The insurer there was Columbia Casualty. CNA is their parent company. So that insurer was also hit with attack. So you've got the insurer enforcing an alleged failure to a policyholder's alleged failure to use best practices, and its own systems are shut down for a couple of weeks, and they had to pay tens of millions of dollars to regain control. The point is that nobody has it all figured out, not even the insurers. But for our purposes, the practical tip here is that on renewal, insurers will sometimes invoke an inspection clause, which gives them the right to inspect the policyholder's network and systems to renew the policy. I think, given the occurrence of these events, it's not unreasonable for a policyholder to push back and say, hey, hold up, that information is confidential and proprietary. I'm not going to give you access to that. And I think it's particularly appropriate to do that with respect to carriers that have been the victim of a breach, because giving them that information necessarily exposes the company to an increased risk of a breach of its own system. So to summarize, cyber risks, just real quickly here, cyber risks are always evolving. The insurance for cyber risks is stabilizing, but it's still evolving too. Cyber insurance is absolutely a valuable tool, but it shouldn't be the only tool. You need to have a cybersecurity plan in place. You need to follow it and appropriately train your employees on it. And also, finally, if you take nothing else from my presentation, please avoid any cyber liability policy that conditions your coverage on the company's negligence. So I think we may have time for a question or two. I don't know if any have come in, but I want to thank you all for your time and for listening to us today. If we're unable to get to your questions during these last couple minutes, we are available to answer them after the presentation ends.
I have a question here, Ken. I think we have a couple minutes. Maybe we can at least get one of these in. The viewer said, with COVID lawsuits, it seems like the majority of courts have found that COVID doesn't qualify as a direct physical loss or damage. What impact will those holdings have on coverage for data breaches under policies with similar language?
That is a good question. A couple things come to mind. First, I think what we've seen from the COVID cases is courts are distinguishing between situations where a business just has to close its doors because of some mandate related to COVID versus the actual presence of the virus in a facility. And I think with an actual breach or a ransomware incident or malware, you can make a pretty good analogy that that's more like the latter category of the actual presence of the virus, where coverage is a little more likely. Another thing is that the types of policy with that language that you mentioned, the direct physical loss or damage, those are typically going to be like a property policy or maybe even a builder's risk policy or some sort of first party property. And those will typically exclude expressly exclude data breaches. So you may not even have coverage in the first place under language like that without some sort of endorsement to add that coverage back in. And I think John M. mentioned this case. There was at least that National Ink and Stitch case that held that loss of use of a server due to a breach is a direct physical loss or damage. Now that was a case where the server actually, I think it actually had to be replaced. But the point is that in any data breach or ransomware attack, there's always going to be some sort of loss of use, even if it's for a short period of time. So I think, the COVID lawsuits, there've definitely been a lot of them, and they definitely will impact things going forward. But I don't think that they even those suits make coverage impossible under a direct physical loss or damage policy.
And I think maybe we have time for maybe one more that we can squeeze in here. One of our viewers asked, what type of security practices do carriers expect businesses to have in place in order to issue a cyber policy?
I can take a stab at that one, Ken, if you don't mind.
No, go ahead.
Yeah, no, thanks. I see this frequently, and I think one of the things that you'll find if you've gone through the cyber insurance process or you're planning on it, you're going to get a questionnaire, right? And those questionnaires have evolved quite a bit over the years. They're going to ask you a lot around what are you doing? What standards are you following? So at a high level, the key is find a standard that works for you. Depending on the sector you're in, you may have some that are sort of custom built for your business. That's certainly true in the financial services sector, but also in like the energy sector, healthcare sector. Those standards are out there that represent best practices. If you're not in a sector like that, you can look at the NIST cybersecurity framework. You can look at the Center for Internet Security, top 20 controls. All of those things are going to get you, if you can do them, they're going to get you to a place where you can answer these questionnaires in a very positive way. And that's what the insurance carriers are going to be looking for, at least from my perspective. Ken, you may have a different view.
No, I think that covers it pretty well. I think there are a few things they're absolutely going to be looking for. Multi-factor authentication for remote access, the demonstrated ability to restore from backups, having software monitoring for signs of intrusion, and then absolutely periodic training of employees on identifying phishing emails and other social engineering scams. We mentioned earlier, we're talking about this before the presentation started. I actually got a phishing email about a half hour before this presentation started, but we're very well trained here at Venable, so I knew exactly what to do with it and who to forward it to. So there was absolutely no opening of that email, but everyone, the risks are out there and everyone could potentially face them.
All right, well, no, sorry, go ahead, John.
No, I was actually just going to, I was going to lead us out. So since I walked us in, I thought I'd lead us out. Thank you, everyone, for being a part of this today. Really appreciate the great questions. As Ken mentioned, any questions we couldn't get to today, we've captured those. Happy to reach back out and connect with you afterwards. Hopefully you got what you needed out of this today, and thanks again. So I think with that, we can wrap it up.